Hello, dear traders. This is Gabriel. Welcome back to my channel, Forex.Real.Trader coaching sessions. Today's video is about a dodgy pattern known as a hammer. The very first thing is to define what a hammer is. Basically, this is a bullish reversal candle pattern that signals a potential trend reversal from a downtrend to an uptrend. It forms when a currency price drops significantly during a trading session, but then recovers to close near the above its opening price. This pattern indicates that buyers have stepped in order to push the price higher, rejecting the initial selling pressure. How to identify the hammer? Let me show you on our charts these very pattern. Look at this. This is a, right? So basically, as you saw here on the illustration, it is a small body, right? Is a small body formation. This is the body, and a long lower wick. This is important to pay attention to. It's a lower wick. The longer, the better, right? Could be either red or green. Could be bull or bear. It doesn't matter. Really, when we appreciate these kind of dodges, the color is not important, right? What really matters is the formation. If this is green or red, doesn't matter, but the wick has to be long with a small, right, or non-existent upper wick, right? So that is the construction. That is the main thing to observe. So here on the charts, we can observe exactly that pattern. So you can observe here this hammer. When the session started, it was a very bear candle, right? So it was bear in a moment. It was completely red. But along the session, and look at this, I am in the 1 hour time frame. Along the session, this bear candle retraced, right? Retraced so much, okay? Became a little bull, right? And then closed. So this is a perfect hammer, right? So what happens here? It appeared, let me zoom out a little bit. Look at this. It appeared after a downtrend, right? A downtrend in here, and appeared as a correction. You see, this is our downtrend, downtrend, downtrend. The next day session happened. It was very bearish. Then after the hour, it turned into a slightly bull candle and forming our hammer. That's it. So we have other patterns, and I repeat, we never trade solely based on a candle's pattern. We need to pay attention to other indicators. But let's see here those other indicators. For instance, I can see that, in fact, after 1 hour, our hammer was formed. Okay, so here I have a real hammer. Perfect. Another indicator that I have in here is that in this very moment, the ADX is showing me a bull momentum, right? There's a cross in here. Also, I can observe that the stochastic is going to the overbought area. So, and there's that green line in here. So this is bull. And also, I can identify that my force index is going bull as well. So I have 3 out of the 4 indicators that I have here. The MACD is showing me divergence, but I can see 1, 2, 3, right? And here my hammer has 4 powerful triggers, right? Or indicators. Okay, I have my trading plan. I'm following every rule apart from the ones that I observe in here. So the next thing here is, how do I trade these type of patterns? So trading the hammer involves the following thing. The very first aspect is my entry point. In what moment am I going to set my entry? Okay, I have my hammer here, but I will not set right away here, right, my entry. No, I don't set it there. Why? Because I need a confirmation candle. What is that confirmation candle? Is the next one, is this candle in here, right? The one that forms in the next hour. So once this candle formed and closed upper, right, the level of the hammer, that is a good signal. And also I have to see the behavior of my other indicators. But I can see that here is a healthy entry. So what is the ATR in the moment of the hammer? The ATR is 9 pips. So remember that I'm going to do my calculation 9 pips times 1.5 from the ATR, and my stop loss will be 13.5 pips. So 13.5 is around this area here. So there's where I'm going to set my stop loss, around this 15 pip area. This is my stop loss. All right. Now, remember, if I am risking here, if I'm risking 15 pips in my stop loss with my 1R, so obviously I need what? I need 30 pips, right? In my what? In my take profit. So I'm going to calculate from this entry point here, in what moment I will get 30 pips. That is around this area here. So I'm going to set my take profit, my 2R, on this area, right? So what is this? This is a 2R, right? This is a 2R take profit area, right? This is my 1R risk, 2R. Remember, always the ratio should be 1 to 2 or 1 to 1.5 or 1 to 3, right? In order to have that realistic entry and take profit, right? So what was the behavior once the trade was triggered? Once it was triggered, I can observe this. This candle, when it closed, then the next one, remember, I am on the 1 hour time frame. So after 1 hour, when I observe the hammer, in the second hour, the confirmation candle closed. On the third hour, after 3 hours of observation, so this is the thing. When we are trading, we need to be patient. That is the thing. It's something that I have always said in the videos. Trading is not easy. It's simple. But the simplicity is also depending on how patient you are, how observant you are of the market, and how disciplined you are in order to follow your trading plan. So here, after 3 hours, this candle, this one here, triggered my entry. And immediately, a little bit light in here, immediately it started to come up, almost here, look at this, almost touch my take profit. But no, it then retraced, correction. Okay, again, almost reaching, retraced. This is the only moment where it became negative, but no danger because I still have enough room from my stop loss. And then it continued up, correction, and here in this moment touched my take profit. And look at this, how many hours, right? It was a trade that was open, right, a whole day and even the next part of the next day. So that is the reason, because we need to be patient as well, right? So this is the way how we're going to first identify the hammer, set the entry, set the stop loss, set the take profit, and of course be patient and let the trade breathe and develop, right? So this is basically the way how we're going to trade the patterns. Always use stop losses, take profits, wait for confirmation signals, be patient in order to trigger your trade. Again, if you find the video, if you find the channel useful in your trading exercise, in your trading learning, please subscribe, like, and share. Thank you very much. See you in our next video about technical analysis on these ones, on the very dodgy stars, hammers, etc. Thank you very much.